Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in the Bookmap Discord Trader Lab community and also YouTube? Thanks. Marty, thank you. How are we doing in YouTube? Okay, Cross. Thank you so much, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. It is April 9th, 2025, and we have very high volatility. The tariff saga continues, and there is a lot of conflict and cross currents. Uh, Yesterday was very important. We basically had a failure yesterday to squeeze out shorts, and that was very important for a potential continuation of the trend lower. Um, that doesn't mean, of course, that we won't have rotations up or even anything can change at any time, subject to fundamental inputs. However, the trend is down, and subject to your trade plan, you can be trading either side. There's a lot of rotations and volatility, or you can potentially stick to a side that maybe has more dominance, which is the short side. And neither of those are recommendations because it is really all trade plan specific. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room unless we get into real time and then we'll talk about trades. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars, PDFs that you can download of these structured trades and the Trader Lab community. All of that is available at no cost. And if you've been in other communities, I'm going to suggest this one is unlike most others. It is professional. It is about the business of trading. It is not Fantasy Island. You have to come in and do the work. One of the reasons Trader Lab was created, and I agreed to do this, was that I have 46 years of trading experience, both as a professional and also out here with you. And I went through a very steep and long, arduous learning curve. Uh, and the reason I agreed to do the Trader Lab was maybe retail traders who don't have unlimited time and unlimited assets might derive some benefit from my experience because we've all walked in the same shoes and we've even been on the same path, but there's many divergent directions you can take on this journey. And what many traders find, unfortunately, after a lot of time and a lot of effort, is that they are actually in a situation that I call trader groundhog day. And that is where it's a mix of indicators and time frames and tweaking and tuning, and ultimately always waking up at the same place. And you can spend years doing it because that's what I did. And I even went from indicators, which were new when I started in the business, Wells Wilder around 1980. Indicators were a new thing, so I spent a lot of time with them, and I had a lot of winning trades with them too. So the problem isn't having winning trades. The problem, at least that I found for me, is that it was not a consistent process, and there was conflict and ambiguity. I tried to solve it by building trading systems because I said, well, like maybe I can eliminate all that. I'll have statistics, and now I'll know what I should do, and the system will spit it out. So I put more indicators and more tools in it, thinking that optimization will solve the problem. Actually, it didn't. It actually compounded the problem. So, you know, more is not does not equal more, in my opinion. It's actually less is more. Interesting, isn't it? It's contrary to what most retail traders do. So I had to find out for myself. And I'm not saying this will be your truth, but after spending years trying to get more winners, what I came to the conclusion was I was trying to solve for something that is not in alignment with our business. I was trying to solve for more certainty, confirmation, and letting the computer do the number crunching. So I would have, quote, more more statistics, which meant more edge. It's all very logical. But what I didn't understand at the time was um, it really, we're not in a prediction or a confirmation business where we're all looking for more. What we're in is a random business where there is no certainty 100% of the time. So what happened yesterday or 3 weeks ago really doesn't have much bearing on today. What has bearing on today is what happened in the ETH, what happened in yesterday's RTH, and then as you go up in time frame, what is the current condition of the market? What kind of fundamentals are actually impacting the market? And are we still in a bull market or are we in a bear market? Well, for me personally, not a recommendation, I've been in a bear market. So for me, the other than squeezes, my inclination is to sell rallies. Why? Because why does the market go up? And then you ask yourself, why does it go down? So instead of trying to predict what's going to happen, which is our primal wiring, instead, this is a gaming business. So if you can step back and not try to solve for certainty, you know, and confirmation, since it doesn't exist in our business, maybe we have to solve for something else. That's the point of the Trader Lab. There's 60 PDFs of the structured trades that I share every day here in the stream. They're all available to you if you're visiting in YouTube. There's a link down there. You can visit the Bookmap Discord, Trader Lab, and the Trader Lab community. There's no cost for it. And there's also a library of webinars. If I get time, I'll show it to you later. So this, I'm going to start with structured trades. Now I'm going to tell you, because you always get the straight oil from the can in the Trader Lab, is this was a very hard day for me. And what was very hard about it was the volatility and velocity. So it was very difficult. So I had to increase my risk to try to fit with the harmonics. And, 10 points is happening in a blink of an eye in the ES. So that makes it very difficult for us. So in Trader Lab, I always talk about trade plan number one, statistical probabilities. In other words, structured trades that have an edge. You only trade when your trade shows up. You don't trade in between. You're not playing a video game. You're actually in a business. And just like the casinos, if we can execute when we have an edge, over time we'll extract dollars from the gamblers. What makes it very difficult today is the chop, the volatility, and the algos seem to be extremely active. So they're pushing and pulling, and that's a great way to get drawn in to the market and start playing a video game where you have no edge. So that's one part. The other part is, for me, I took a lot of stops today. I've had some really nice trades with some good winnings and a ton of scratches. And the velocity just has made it very difficult. So for me, I can't say when the dust settles here that I've accomplished anything for today. But yet my plan is still functional, but the velocity is a problem for me. So it's just, it is what it is. There are, as they say, there was a song, there's going to be days like this. Well, there are going to be days like this in trading. Now, other traders might be, more able to operate in this, but based on what I do and how I operate, this is not a great opportunity for me. But you don't know that until you're in. So this is the RTH Open. And remember what happened yesterday. What happened yesterday was we took out the previous day's high, and then just a little bit above that was the day before that. So those two highs were close, and then there was a big gap. So my plan yesterday was to take out day before day's high, which we did, and then squeeze up and potentially get up in the gap. So I got part of it. And then the market reversed, fell out, and then it was shorts all the way down. And you guys have followed the stream, you know that. So, but today, I'm still looking for continuation of that selling. But it's very choppy and very volatile. So I can't speak to that except to say my plan is lean short, cover on squeezes, and I'm only been taking short trades. And that's just me. I just tend to try to get aligned with one side and then put a helmet on. This is the first short. Now let me show it to you. And this is a structured trade. Now, don't forget RTH Open, who knows? Now there's a couple of things. Let me get my statistics, and you have to vet these for yourself. Grab your pen and paper. We opened lower inside of yesterday's range. Now we have some probabilities. Now, in the scheme of things, probabilities, statistical probabilities are just a piece. What is most important in trading, in my opinion, is the context or condition of the market. For me, it's down. So number one, the higher time frame is down, and volatility, of course, it's been increased. You guys have seen the rotations. Now, with that is, of course, increased risk and, of course, opportunity. So you have to adjust. This is what trade plans are about. Trader Lab focuses on helping traders build trade plans, dealing with their emotional states, and only interacting if they have the discipline. And you got to develop the discipline. Only interact where your edge shows up. Otherwise, you're just sitting in a casino and maybe on the wrong side of the table. And yes, you're going to have winning trades if you're a gambler. Gamblers have winning hands, but over time, the casinos extract the dollars from the gamblers. The way I look at this and what I painfully had to learn over many years was I was not in the prediction business or let's get right business or be right business because I needed that psychologically. I was in the statistical business or the gaming business. So I was always trying to solve for the wrong thing. If you come to Trader Lab, you might have the opportunity to learn what this business is and then maybe develop a solution so you can operate it in it and potentially create a career path for yourself. Are you guys tracking? Are we doing okay? By the way, please give a like if you're visiting in YouTube. I want you to know I like you coming here, and I hope you like being here. So give me a thumb up, give me a like, because I like you. It's a mutual admiration. You're traders, you're here to maybe find something different. I'm here to help you. And there's no cost for what I do. I basically do it out of, I don't know, I think what it is nobody helped me when I started because there was nobody. All my friends were floor traders, so they thought I was nutty. And I have to, looking back, I say my fantasy of what I was getting into was all that what it was. The reality of it was very different because when you have no experience, you kind of imagine. And the other problem was there were no indicators. They were just coming out, and it looked like, at least to me, that the Holy Grail was in the indicators. You know, the printing press, the ATM in the basement. That's what it looked like to me. Anyway, this is the RTH open. There's your open. And right here, this is the retail price. Now, you guys have followed the stream. First of all, there's 60 PDFs of these you can download and reverse engineer. Hold on one second. I have to change some settings on my IRT, which is my higher time frame, if you will, charting package. It exports levels to Bookmap, which is very nice, except we don't want to see those levels right now because they're for the entire RTH. So something like this, these will come off the chart, and so will those low volume nodes because they're not for the current market. I should say they are for the current market. They're not for this. So they will exit stage left in a little bit. So this is the RTH open. We have something called VPOC migration. This suggests the market might move higher. Are you guys tracking? Follow. Market moves higher. I get a sell sweep here. This is all order flow. And I have resting liquidity in the book right here. So my first area of interest is here. And I have no clue, part of the thrill. No way to know. So the market's going up, it's going up. Now I don't want to get long. I'm thinking, well, this is nice. I'm looking for shorts. So my first trade is going to be here. So let's take a look at this. VPOC migration. What the language of the market is, and I don't use indicators, I attempt to speak the language of the market. I wonder why I'm not updating. Hold on a second. Oh, that one's gone. Okay, this one disappeared. So too low. This is support in the microstructure. I'm going to put a little label on it. I'm just going to track with this so you can see it. Anyway, my buddies are all floor traders and there was no information. So since I was in the business early on and I had no idea, and I was an off-floor trader, I was going to buy a membership. I was within a hair of getting a membership. Yet my personality type is an analytical. I'm not a street fighter. And basically, these guys in the pits, they were more like street fighters. You know, I mean, every once in a while, somebody would lose their mind and stab somebody else with a pencil down there. I mean, it was nuts. And I thought to myself, I said, well, I wanted to go down there on one level. On the other level, I really was so interested in the technical aspects of the market that I just didn't do it. And I and I look back at it now and I go, I guess that was a good choice. But at the time, I really had conflict. So we come up here and I get a buy sweep. VPOC migration. This is the new retail price. I break below. This is support. This is now resistance. Location. So this was the first short that I took, and it's a structured trade. Now, who knows? Let's see what happens. Mid, VPOC migration. Let's just come back and follow this. This is called structured trades. Now, the thing about a structured trade is they are not mechanical in and of themselves. What they are is structural. That's why I call them structured trades. Look at the structure. Buying. And what is the buying? I get selling icebergs and I have buy stops. Only four. A buy sweep. What's a buy sweep? Well, what a sweep is the order book is getting swept, but this is what's important to me. So I get my sweep, I get my VPOC, two possibilities. Up, I know, or down. If this, which is the current retail price, becomes too high, and I have my liquidity, and I have my sweep, this is a structured short. Break low, test. This is the entry. Now, this thing was running so fast, it was like getting away from me. So my risk, which I don't like, who likes risk, was getting outside. I had to drop my size down and really adjust what I was doing. And then this is support here, VWAP. This is now resistance. This is resistance. And of course, over here. And then we're going down here and wherever. Let's see what happens. VPOC migration, right? So everything is fine. Risk neutral. Thinking I got you now, right? Isn't that what we think? Take it out. Okay. So this goes from I gotcha to not so much. And where's our support? Let me show you this. So when I'm trading, I'm using these levels. This was the first. So RTH open, we have volume right there. And this is the first level of volume here. So this becomes a support area. It's a variable high volume node. Let me show you kind of the logic in all this, if you will. Uh, Auction market theory is shopping. And the yellow line here represents high volume. As the market's running around, the volume and price will move together. And if a price with high volume becomes too high, we can leave it. So when I'm above this, I'm going up. When I break below this, that is saying, and to me this is language. That's how I interpret it. I speak a language. Indicators, if you will, are outputs of a derivative of price. Okay, they're price based in some way. They derive something out of price, and they're backwards looking. So you need enough of price inputs for whatever that is to detect potential change. I know it's right here. So when I have the sweep, the liquidity, and the break, I'm below my high volume. This is like shopping. Imagine this is a store. You go to the store and the can of tuna is $3. And you say, I'm not paying that. And we leave it, you see. Now, if the price now is too high here and too high here, and it comes down, it's saying this is too high. And if I test it and it's still too high, I come down. So that's the logic. Now let's come back to what was too low. there, and there. Where's support? It's there. Now, the fact that it's support, I have no clue. This is unfortunate because, why not go through here and just fall out the bottom? I have statistics down. Well, the question of why, there's no answer because it's random. So we can't answer why in the present. We might be able to answer why in hindsight. We don't trade in hindsight. So what I know is when I'm coming down and I'm managing my trade and I'm, holding on, it's like I'm telling you, it was like being in a storm, in a dinghy. That's what trading has been like today for me. I don't know about you. So this is support. So I'm looking forward to take this out because I have no reason to think it won't go because I have statistical probabilities. ETH mid, it's probably about, and I'm not going to get into the statistics, you can download them, but it's about, I think, about an 80% probability. And yesterday's low or high, an 85% probability. Overnight VPOC, probably about an 82% probability. First hour's high or low, wherever that is. I think it's someplace else up here. Um, Over a 90% probability. So that's my trade south of the border. So I'm only taking shorts today, and that's only me. I'm not saying that's a good plan. I'm just saying it's mine. And that doesn't matter. And now other traders in TraderLab are taking longs, okay? And shorts or whatever they're doing. It's their plan. I just trade my plan. And there's some days, my plan looks like it walks on water. And there's other days it's like, what's going on? Because that's the reality of trading. Uh, we develop plans for most of the conditions we're going to run into. And these plans work across really everything, in my opinion, and they need to be a little tweaked and a little tuned to volatility and all that, and trade management, all of that. But the process of the auction is generic. You can apply this process to any time frame, whether you're a swing trader or position trader or option trader or you're trading in this, day trading. It's all the same because the market's generic. It doesn't know anything as far as the clock goes. Okay. What it knows is what happened here. So I don't use time. And in the intraday developing time frame, I just use fractals because this is a fractal. This is an auction. So it's a fractal. When the market leaves it, it's saying too high. I don't need 5 minutes to figure out that the market's going down. I can tell right here. So I don't impose time on the participants. I use their behavior. Now here I come to my location, and am specifically clueless, not ignorant, clueless. Right here, I see my buyers. My resistance is here. Break above it. Now this is very important right here. This is resistance and that is resistance. Why is this resistance? Because it was too high and I broke away. So right here I know is resistance. I come up here, my teeth are chattering, and I get taken out of my trade. Okay. So that's my first trade. I'm not saying it's a good one. I'm just saying that's a trade. Okay. Now what? This is my next location. This is called the naked volume point of control and settlement. Okay, from yesterday. Now, this is important. This is the highest retail price from yesterday's RTH. And let's take this from a fractal. In the developing time frame, this is your retail price right here in the developing time frame. Well, yesterday, settlement is here and the naked volume point of control is here. Let me find a statistic for you. Just to give you something to chew on. There's a 70% probability we'll get there. And that's good enough for me. So, and it's marked. So what do I have here? Once I get squeezed out, and I see the thing with trading is we don't have to go here. We can go down. I mean, we could do whatever, right? This is part of being a day trader. It's not our job. We can't predict. But what do I know? I got liquidity and I got a location. You've heard the term in real estate, location, 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 right? By the way, if you have questions, post them. By the way, I have the chats and YouTube on a different monitor. Are we okay in Discord on the audio, guys? Where's the series? Oh, the Series Cafe. Um, I don't think so. We used to be a place on called Brokers, which was on. Gee, I can't remember the name of these streets. It might be Federal something or other. That was there forever. Everybody would go there, and then in the morning for breakfast, we go to Manny's down on Jackson, across from the old Merc. When I started the business, the building that is currently the Chicago Mercantile Exchange didn't exist. So we had something that looked like a square box down on Jackson. That's where I started, uh, where the Merc was at the time. And I was not a member, just to clarify. So this is my location. Location, real estate, liquidity in the book. Remember what happened over here. Location, real estate, liquidity in the book, right? So I'm looking for a short up. And if I get a short up here in this area, then I'm looking to come back here. It's called mean reversion. If this is too high, this is the current retail price. I can come back here. Let's see what it does. Can't remember. Watch. VPOC migration. This is suggesting higher. So again, the teeth start chattering. Do I want to not take the short here when this says that this is too low, and now here's my retail price, here's my location. Right here, I have my retail price. Let's watch. This sets up a short for me. I take the short. I'm thinking, yeah, I got him now. VWAP, mid, and where? Here. Right there. See it? And this jumps in. And it's like, what? So anyway, for me, the trade is from here to there. And then again, holding for the, they call it the Hail Mary pass. This is a problem. Now this jumps in here. So I look at it. Now let's remember what happened here. Too high, maybe. Liquidity, trigger, break below here. This is the short or up here. For me, I get in sooner because I'm reading order flow. But from a structured trade, if you couldn't read order flow, you could build this into a short right here. And your scale is ahead of this, or you could scale in this because we might get mechanical buyers. And they might be right. Remember, the gamblers win, and maybe I'm the gambler. I am, I guess, but I'm trying to be the house because I'm only taking trades that have a statistical edge. And that doesn't mean I won't have losing days or hit my loss limit. Part of the thrill. Too low, interrupter, too high, resistance. Let's watch. Support, resistance, resistance, support. Support. Watch the behavior. So this is also a short coming back. VPOC migration. Short coming back. VPOC migration. All these are potential shorts in the Trader Lab if it fits your risk perimeter. Now, where's my support? Same place. Here. So you get short here, you get short there. Wherever you get short, it's up to you. Support. You got to scale ahead of this because it's still in the book. It's like, get out of there, right? You ever talk to the market? Get taken out. So I'm getting, I think the word I want to use is a little frustrated because I'm taking, I think, some pretty good trades and I'm not getting anything for them. So now we have a single up here, and I posted this in TraderLab 64. A single is in market profile world is when we broke yesterday and we created this trend day down yesterday. Ultimately, this was an area that the acceleration took place, and it was poorly auctioned. The market's tendency is to come back and test these. This was my next level. There it is on the chart. So I'm looking up in here to get short. I posted this in TraderLab. Now I don't call trades in TraderLab because who wants to take my stops? I take them. Everybody does. So there's none of this, nobody's immune from managing their risk, so they're here for the next trade. I'm not. Very happy to tell you I take stops, I take scratches, and then, of course, I even have winning trades. Isn't that amazing? But this volatility is making it very hard for me. So I'm looking here. I have my liquidity coming up, nothing to do. I have liquidity here, and it's at my location. Okay? So I'm looking for a short. Let's look at the setup, if you will, or structured trade for the short. Now I blow through here, and right in here, I'm looking here, and I'm looking for a short right here. And I get the break high, and I hold this. This is a support level now. So right here, I'm going, what's going on? I'm up high. This is support. Watch. Support, support. Now, for me to take a short, it's got to break under here, and I'm going to short against this, but my risk is going to be pretty, look at the risk here. So this, you can see the outsized risk. Let's look. Break low. Buyers were here. Buyers were here. This is my short. Stop has to be up here. Structured trade, kind of advanced. Now, here, I have a high volume node. This high volume node is the same as a variable high volume. In other words, high volume is high volume. And what this high volume is representing is this chop, 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 chop in here. So we have liquidity was here, and you'll notice the liquidity starts coming back in over here. This is my scale. VPOC migration. Now, right here, there's two possibilities, and you know what they are: up to low or break, continuation south. So hanging in the short, having a good time, saying, yeah, I got you now. Where's my other variable high volume node? I got to mark it just so we don't forget where it is. So this is my next target down here to observe. So I label these things, and then because I know what happened here, I don't know what will happen, and I'm going to come up and look at your questions, and this jumps in the book. And of course, when I see this, I'm getting disturbed. Now, I posted in TraderLab, and I don't remember if it was for this trade or other ones, that 50.17 was a target and 50 even was a target. Let's watch this behavior. Remember, this is support. Let's see what it does. Hits the liquidity. This is support. Right here, you have choices. You can exit. We break high. We hit the VWAP. We have a structured trade in TraderLab called VWAP to VPOC. This is so fast. I was going to add. I had no chance. It does bing bang, and I'm back here. So right here, I got to get below this and this. This is still in the book. So I'm trailing behind. I see this. I'm not happy. I have come here. I miss a trade. I just can't execute, so I don't take the trade. The trade is a structured trade. It's from here to here. It also can be mid to there. So both trades are structured trades. So I missed this one. And the other part that disturbed me with this, volume point of control is now here, retail price. This is here. If I can't get below this and that, then there might be a squeeze. That's what I know. I don't know anything else. See what happens here? So this is using the auction. And I'm telling you, I am losing it. Resistance is here. Let me label this. I'm going to stop for a moment here. I mean, I found today, very difficult because I get rotations, but I'd be getting bounced out, leaving a lot of MFE on the table. It just was a frustrating morning for me. I don't know about the rest of you. I hope you did better than me today because it was just a wild experience. Liquidity comes in the book. VPOC migration. If this becomes too high, I can come out and come back here. So let's watch. Sweep, Liquidity, I took a short. Once I see the sweep and I'm coming into the liquidity, I'm back here. I'm taking a short and I'm trying to scale here. And then I'm looking again because I'm bearish overall that I'm selling counter rotations. Resistance, Heath chattering. Here, I got a scale. I took a scratch. I'm getting like, come on. You ever get like that? And then you get this. So, let me show you. I'm going to show you another entry I took. This is here. We took it out. At this point, I'm looking at this and I'm going, what's going on? The volume point of control is here. If we come outside, this is called mean reversion. It's outside in trading. So I'm still, maybe I'll regret it naturally, you never know. I'm still looking for shorts, but I don't have a short here. I don't have anything here. I have what's going on here. But I have this and I have this. If I come outside and I come back, now here's where I took a short. And now this is not really a structured trade. This is just something that I kind of occasionally do because I'm looking for the market to come to 50. So I have 64, which was an important area. I have an outside edge up here. This is a distribution. And what a distribution is an auction. It's just a consolidation. So the buyers are here, and then, we get this guy, and then we break below the buyers, which are here. I break below the buyers who are buying here. The high volume in the structure is here. So if you put a little box around this thing, you'll see where the buyers got run over. Break low is a trigger. I'm looking to lean against this and this to come here and to take and to continue again down. Like, come on, right? You ever talk to the market? Scale. So the short is against here, scale, and then I've got this again and all this. And let's look at the book. 50. I posted in Trader Lab. I have two locations. I have 5017. I think this is the trade. I can't remember them anymore. And I have 50 for targets on this short. Too high. This is the auction. And I'm losing my mind. Don't worry about it. Everybody does. 17 was a target. This is in Trader Lab. And then the idea is to come down here. So this was my target because of the liquidity and a strike price. So I'm just telling you. This kind of volatility, I'm telling you, Dramamine for everybody. Too high. Now, this kind of volatility, not my preference, if you will. Where do we come back? See, outside edge, low volume node. This is called mean reversion. And the speed is making it very difficult. Okay. So for me, remember, this is the short here. Where do I come back? Right there. Bookmap, by the way, is working, I've been told, is working on enhancing drawing tools. So fingers crossed, we may get a tool. Let me show you this. Because you notice when I do these tools and I mark locations that I have to continually draw things out. I'm going to just show you kind of what I'm talking about. The buyers were here, remember? So let's just draw a little box around this thing. And I'm going to just draw it all the way out here so I don't have to keep redoing it. Also, we have this. So I'm going to just put a little box here just so we can see it, okay? So this is a consolidation. This is where the liquidity was. Are you guys following me? Guys, are we doing all right? Is the audio okay? Everybody doing all right? Okay, good. How's the um thanks, Mr. B. Thanks, Casey. By the way, is the I've upped the frame rate and the for the video in the Discord. I'm hoping it's sharper for you guys. I don't know. So this is where the buyers were, and you get the break. This is right in here. Now, if you understand order flow, you'd be getting short at a much better location. But I do it this way because as you're developing your understanding of order flow, if you don't understand order flow, then I'm putting structure around the order, the order flow to help you see structure. I call them structured trades. Uh, the idea of a structured trade is, remember, the structure is created by the participant behavior. So this is a trigger and a test is the entry. Stop has to be out here. Now, again, if the range is too heavy for you, you can't, this trade won't qualify. We have outsized volatility. So this creates, because of these rotations. So you've got to make adjustments, and that's all part of Trader Lab. So anyway, support's here. Break high, test this. All these are short entries. And then you're coming, we're going actually back here is where we're trying to get to. So anyway, let's continue. And remember, 5017, all posted in Trader Lab, was a level, and then 50 even. And I could show you all these. It's all before the fact, but it doesn't matter. It's just what it is. Where do I come back? Let me get this and bring it over. You can see this. We're gonna. So this is where the sellers took over. The concept about this and the liquidity, I'm going to do the same thing with this guy. Just going to move it over so you can kind of see how you might get alignment with an order flow tool. So this is an important event. We broke above it. We broke below it. This is also a short. So you have short here. And when I say it's a short, you got to vet it. It's a short for me under the right conditions. So this was an ad for me. And then get risk neutral. So whatever happens, happens. And then I'm looking for this down here. And I'm looking for 50 even. So 17 was a target and then 50. Break, come back to my location here. And then I have this. So let's watch. And I have a buy sweep. This sets up a short right here. There it is. Another short. I took this one. I'm thinking I got you now. And this is called mean reversion. And it's mean. Scale is here, building a position. And I do that. It's not a recommendation because when it doesn't work, it's like you stuck your hand in the fire. VPOC migration. What does this say? Let's speak the language together. I don't use indicators. I had to learn to speak a foreign language, the language of the participant behavior. So what I'm doing is I'm doing the same things I did with quote indicators, where the indicator processed the inputs, except now I'm processing the inputs. And because I'm using order flow and I have a sweep here into a location, I already know where the location is. You see, this is not about what should I do? It's where's my structured trades, and this is called mean reversion. So that's the mean, and then south of the border. And where's my liquidity? It's right there. That's where I'm trying to go. VPOC migration. So this is too high. I'm not paying that. Get out of here. Retail, break low, target. Okay. Now there's more. This is an advanced process in Trader Lab. This is another short right here. And I'm going to be caught up. I don't know if I'm going to be caught up. Actually, I'm not going to be caught up. But I'm going to show you this trade. I took this trade, and my teeth are chattering all along the way because of the volatility. It's very hard. So normally where I'd be entering and putting stops, I have to push them further away. I had to reduce size. This is a structured trade. Now, it's in alignment at the time with what I think the trend is, which is south. This right here sets up a continuation short. It's here and here. And where's my target? Here. And okay, so this was a short, and the entry is here, there, against the bottom, right here. Here's the buyers. I'm just going to throw a line on here. For those of you who don't understand order flow, you can understand structure. Trigger, pullback, resistance. You've got your entry here. Your stop is there. It has to fit. You're looking at what? 5, 6 point stops. Normally I run around 3, and the volatility here I'm running 6 or higher. And the target's here. So this is okay. Okay, are you guys with me so far? How are we doing? By the way, if you're visiting in YouTube, how about giving a thumb up? I like you guys coming here. I appreciate it. So I like you. Hope you like me. How about a thumb? Stephen, I've increased the, I think I'm on 1440p instead of 1080. I don't know if that makes any difference in Discord, but Discord's in real time and YouTube is delayed. So if you guys are in YouTube and you want to have this in real time, use the link down there. You can come to the Bookmap Discord Trader Lab community. And by the way, just to remind you, in case you missed the beginning of the stream, hold on a second. Okay. Checking some stuff here. 1 second, guys. One second. Are you still hearing me okay in Discord? We are right there? I think so. I think so. So this is the Trader Lab community. This is what's going on here. A lot going on, charts, interaction. It's a mutual support. I mean, we're all trying to get better. Me too. I've been doing this 46 years. I got news for you. You think that all of a sudden you've arrived. The market is constantly changing. We're like athletes here. We are competing against the best minds on the planet. And I can tell you, the best minds, I've worked with these guys, quants, hedge funds, we are competing not against them, but we are swimming like minnows with the whales. So we need to understand what we're doing, and we need to practice just like any professional athlete would. Now, and I post in here all the time, okay, when I can. I mean, I also am a full-time trader, so things get a little, murky here. So anyway, there's that, and thanks, Ned, for curating the Trader Lab. And there's a library of webinars. This one is the primer. It gives you a high-level overview. It's got over 31,000, I think 32,000 views. Meet the Trader Lab. Why the Trader Lab? It's an advanced trader education portal. What you're going to see in Trader Lab, you're probably not going to find elsewhere, as far as I know. Aspects or derivatives of it. But when I started doing this, it didn't exist. Also, this is a good one. This shows you trade plan, the structure showing up, and then the trades. And then you might want to look at it if you're indicator based, why most retail traders using indicators fail, and also trapped in Trader Groundhog Day. And Trader Groundhog Day is tuning, tweaking, and doing the rest of that and still ending up with the same outcome. And we all have winners. The problem is we all have random winners, and we think it's just about making it better. I think that's what you call the trading catch 22. Does that make sense? Costello is asking me a question. Good question. How do you know that a 3 point stop won't be enough? You got to look at the volatility of the rotations. This is outsized volatility. A 3 point stop won't work. That's throwing money out the window. When you're having rotations, like this kind of a thing, When you're in 20-point, 30-point rotations, 3-point stop won't work. Typically, um, the rotations are called harmonics. In other words, what's the noise in the market? In other words, the trend can be down and we'll have these rotations. It's just the nature of how this thing works. Well, the rotation from, let's say, 02 down to 82 is what? 20 points. So you need to be thinking at least 5 points, maybe 6 points to operate in this. So if you're, for example, if you're late because you're, not meaning you, anybody, any of us, do not have the discipline to wait for the structured locations, which is right there, and you jump in here, your risk is still out here or out to this, really. So, and it comes back here. If you sell it here, your stop must be out here. And the micro high volume is right in here. This is your resistances in here using structured trades. So you got to adjust. So how do you know? You got to look at the rotations, and you should just eyeball a couple of trades and just see, would you be stopped out? Now, we all take stops. I've been taking them today. I've been having a great time with that, just the way it is. This is the target down here for this. So the short is here, structured trade. Target is here for scale. And then for me, I'm going for overnight mid, not a recommendation because it's statistical probabilities, and take out the stops at yesterday's low. That's all in my plan for today. I'm not saying it's a good plan. I'm just saying it's mine. And then this. This may have a reaction. Notice the liquidity stacked ahead of yesterday's low. So there's a reasonable shot we're going to get there. Or not. I don't know. We don't know if, we don't know when, we know nothing. You guys have questions. I'm going to jump to real time now. Wow, where's the market? Let me get back here for a moment and post your questions if you have them. I want to go into real time. I want to take a look here. I just have to look and see what's happening here so I can see where the structure is. Okay, I've got structure here and I got structure there. Let's look at this just for openers, because these are resistance. Right? Whoa. Okay. I think that's about right. Then we have this one. Just going to drag it to the right so we don't lose it. So resistance is here and there. So for me, a short is out here. It's called mean revert back to there. And then and now I have support here. I have resistance there. So this is a rotational trade. And the market is in balance. But that you can see how it's symmetrical. So until we break out of one of these things, we're in reversion trading. Now, for me, and this is not a recommendation, it's just me, I'm bearish. So I don't necessarily take the longs. I exit on the longs and I continuing putting the shorts out. So I just primarily, and it's not a recommendation, I just find it's easier for me. I don't want to be flipping around like a cat on a hot tin roof. I take a primary side. And in my mind, we're in a bear market for me based on higher time frame and yesterday's failure. What's driving my preference for the short side, which doesn't mean I won't get squeezed out and we won't close higher on the day. All that's possible. Has nothing to do with it. Is we failed an important test yesterday, and now I'm just staying short. And it's not a recommendation. Now, where am I trying to go with this short here? From this location down here, because it's called mean reversion. This is a specific plan in a plan. And it doesn't mean I won't. I take stops too, guys. Guys, you're not the only one. It doesn't matter to me if I take a stop. What matters to me is that I follow my plan, because I've developed a plan that over time, just like the casinos have a plan, that over time they extract the dollars from the gamblers because they only play games with an edge and they play them exactly the same way. They don't make them up. Gamblers win also, so the casinos pay the gamblers. Well, I take stops, so I pay the other side. Fair enough. But over time, if I'm trading an edge, I'm going to extract the dollars in a random distribution of outcomes from those gamblers or the other participants. You don't have to call them gamblers, but most retail traders are gamblers. They don't know it. And it's a matter of which side of the table do you want to sit on. I want to sit with the house. Yet, this trade here may not get here, and it may take a stop before it gets here. That's just life in the fast lane. You just go, okay, that one didn't work. Now, where's the next location? Locations out in here. We also have a sweep. We have micro high volume right there. This is actually the location. So I misspoke. Haven't seen any of this. So this, this right here, we're trying to come here, but this is the location and out here. So not so much. Okay. So misspoke. You guys have questions. This is Trader Lab, and the Trader Lab is a community of like-minded traders who come together to leverage their experience. These trades you see me discussing here are based on these 60 PDFs, and they're available in the Trader Lab community. Some of these are actual trades, some are just screenshots. This is actual trades. You can see them there. Scale, short, what's going on with the liquidity. And I did these, this one's 2020. I just put these together because other traders were asking me, what are you up to? What are you doing? How did you, quote, know that? And the truth is, I don't know anything. I just know where my edge lies. This is a structured short, another trade I took. Okay. And some of this is research oriented. It's not anything I use today. I was working with Bookmap developers back then, and you throw ideas around. Some of them have been incorporated into the add-ons that you see currently in Bookmap, and others, as I say, got thrown out because that's what you do when you do research. So, you know. So anyway, these are all available. There's some order flow phenomena. This is an actual trade. I was sitting short. This is a bracketing algo. They pulled, they pushed. I hit the eject, the canopy blew off, and I got out here right when that happened, and then the market went whew, and exploded up. Order flow can help you with things like that. And again, there's no perfect solution, right? VPOC migration. Location is here. You see it? Now, we're back to real time. So this is an area. Let's see if we can figure this thing out. Actually, let's look a little further here. Liquidity is here. See it? Liquidity is there, and this is where our liquidity was previously. This is order flow. These guys come in the book here. Notice what happens. I rotate up, and what happens here? You see something? This is order flow. And what does this represent? The passive order book, the guys you don't see. This is a structure right here. This is a short if it's in your plan, and you're trying to come here and out the bottom. That's what I've been trying to do all day. But here's what you got to be looking at. Let's come back and look at a couple other things here. So we have this, right? And want to get back to this because this is material, wherever it is. I think I might have lost my file. So this tests the bottom of that previous liquidity. This comes into the book. We test this. So you have, let's look very closely. This, let's look. See this, guys? I hope you're with me. This is order flow. Now, I have no idea, wish I did. This is my resistance. And right in here, the liquidity comes in. My buyers are absorbed. That's a selling iceberg. 61 buy stops. Iceberg, okay? So that's the limit. And that creates a short and the goal would be to come here. Now, this is a little bit more advanced because this is a liquidity, order flow based, and structurally based trade, and you're trying to go here. Okay, let's just see if we get there. Notice where we go. So if you took this, you're scaling here, and then as they're saying, is you're promising you'll never do it again as long as it breaks here. But we're in a rotational trade. Now this is workable, but the thing about it is you have to anticipate these locations because I don't want to be entering here because now my risk is out here. So what I do is, because of a structured trade plan, I don't know what will happen. But as the market's coming up, I have to look left and see where my behavior is. And then I got to look for absorption. That's what happens here. The buyers are here. But why doesn't the market go up? Because there's passive sellers, and that's what's happening in there. Passive you don't see. It's limit order book. That's what you're looking at over here. So the heat map, instead of looking at this and trying to figure out what's going on, I can see it here. So this is kind of like a roadblock. And where was my support? Well, it's there. And they come back in here, and then I have my variable high volume node in my mid. So what do I anticipate at the mid? Buyers, retail trader behavior. What's under the mid? Stops. So I know the following. I know if this is too high, then these guys are going to get stuffed, and so are the VWAPers, or they win this one and I get taken out. That's what I know. I don't know anything past that. But this is where you got to scale. Does that make sense, guys? Are you guys with me? Yeah, Costello, part of trade plan is you got to know uh, when the rotations get outsized like this, you need a different plan. And all it means is the structured trades are the same. That doesn't change. The thing about the auction, and we were discussing this in Trader Lab yesterday, is it's generic. In other words, the behavior is always the same. Coming down here, and it's random, but the potential behavior is the same, I should say. This is a structured trade. If the range from here to here was 6 points, it's the same process. So we just have the range. So we have to adjust for this rotational aspect in the volatility. I'm still looking for the potential to come out the bottom. Doesn't mean it will. It's not my job. I can't predict anything. All I can do is try to get in alignment. That's what trade plan is all about. Whoop, things are sticking here. Does that make sense? You guys have questions? Post them. And thanks for visiting Trader Lab today, by the way, guys. And I want you to know I really appreciate you guys coming here and visiting with me every day. And I hope it's going to help you get a better understanding of the business you're attempting to be in. Trader Lab is about the business of trading. It's not Fantasy Island. I'm going to tell you there's no holy grail or secret sauce. I spent years looking for whatever it was that others never saw. Maybe I'll find that needle in the haystack, the right combination of whatever, right? And we typically look at indicators to solve for that. And so it's more indicators, more time frames, more everything. And then I created my own. And I like to mention this only because if I know we get a lot of new visitors. So if you've heard this before, guys, just cover your ears for the moment. I shared an office with George Lane. He created stochastics, which was an early oscillator. And I saw this thing, and I had, was not familiar with oscillators. The whole thing was new, you see. So, and I was at the time, there was no real day trading, just the guys on the floor, and they were scalpers. And then I was a position trader, so it's trend following. So, the line crosses over and the thing goes up. It's like, wow. So now as I developed, I started managing money and stuff, and I was using indicators. But I always found what was happening is I'd be using these indicators, but they didn't always work right. It seemed I couldn't understand it. And because I didn't understand at the time, we have directional movement and then we have rotational movement. And what we tend to do, human nature, is go back and look at the big trades, the big rotations. Oh, I want to get those again. Well, the market gets directional and then it gets rotational. And that's either intraday or in higher time frames. It's all the same. The market is the same. So I solved for trends and directional movements, and then we get into rotations. And all the dollars I would make, or a good piece of them, notice where we're coming, and it's reversing. See this kind of thing? This is all outside in trading. It's two-sided trade. It can be very vicious and nasty because you got to be very timely. And if you can't execute, you just don't have a trade. And this is the mean. So it's outside and then possibly out here. I don't know. That's support. You see how this works? What is this? That's resistance. So rotational trading. So what would happen is I would solve, and the optimization when I build systems just puts it all together. And you're thinking, well, look at this, this yield, all that kind of stuff. So you get all your metrics. But when you're curve fitting, you're going to get your best outcome. The market doesn't stay in that box. It's constantly changing. So we solve for the big move, right? Because we see all those points, and we curve fit for the big move. Where you lose your dollars if you were looking for the directional movement is in the rotational movement. And you can stay in chop a long time, subject to your time frame. And that's like whether you're a day trader or you're a swing trader, same difference. So I was a swing trader and a position trader, and everything would go great under certain conditions, and then the condition would change, and my system, if you will, go out of alignment. And depending when you would be trading this, you could enter and start trading in a chop and just immediately go down, the financial commode. And so I'm saying is those are some of the problems. So I found out then, and so I just worked harder at indicators, and all I did was get more of the same. Didn't never changed the outcome. It just meant more years of work, not ending up, And then I tried building separate systems that would switch. So directional movement, one system is involved. When it would detect the change from a directional or trending into consolidation, one system would turn off and the other one would go on. But guess what the problem was? By the time it detected the change, the damage was already done. Does that make sense, guys? I'm just sharing a little background. Are you guys following? So this is your outside in mean reversion trade, okay? For this to go lower, it's got to come out here. Currently, we are in what's called balance. It's a difficult trade in the sense of you have to get risk neutral quickly. You got to manage your trade. Um, I'm good at mean reversion, but and there's enough range here to make it worthwhile. But look at this here. You have to be very timely on your execution. And if you can't execute, you don't have a trade. Because I'm a human, when I see this and I'm in my area, and then the next moment it's down here, I can't execute this. You see? I can read it, but I can't, if I can't execute within my risk parameters, I don't have a trade. I just go, oh, that didn't fit. And my plan is it's got to fit. And I have to execute within a risk, parameter that is determined based on volatility and my account size and the rest of it. So if I can't get in the trade, no matter what it does, then I don't have a trade. I just go, I don't have a trade. There's so many opportunities during the day or even a day like today that if you're patient and you have discipline, and one of the problems for most retail traders is lack of discipline and FOMO, that you're going to be getting short here. Well, you have a good chance that if this is the outside edge, that we just come back, up here because it's a rotational trade. You don't want to be taking trades in the middle. You want outside in, both ways. And I'm still looking for the bottom to come out. And the fact I look for it doesn't mean anything. It's just I've chosen, based on my analysis, that the advancing side are the shorts. And it doesn't mean we won't take out today's high, current high of the day. It has nothing to do with it. It has to do with the overall higher time frame alignment, which is the way I like to go. So it's just me. It's not a recommendation. Watch the behavior. Remember, support is here, right there. And resistance is here. And we're doing this. One of these times, we're going to break out of this. And I couldn't tell you which direction or when. It's not my job. But that's what mean reversion is. In the Trader Lab, you have a separate plan for this. It's called outside in trading. So what it is you get outside here, you get outside here, and the nature of the market is to rotate. If you know that, you're not putting a trade on looking for the bullet train. And it may turn into that. But at the moment, all you can do with this is sell it, get risk neutral, look to come outside to there. Notice what it's doing. This is mean reversion. That's the mean. And I hope you're getting something out of this. This is what mean reversion is. And in Trader Lab, we kind of joke a little bit. It's mean because you can put your trade on here and get risk neutral, and then it comes back and squeezes you out, you see. So I find I take more trades in mean reversion, more scratches, and regretfully more stops. So just the way it is. So if I get short here, I go here, I'm okay. If I look at this and I take a short, I get a scale, I get taken out. I put another short on here, and this one I wouldn't have made. I wouldn't have been able to get in, but let's assume I got short here. Scale there and looking for it to come out again. What does it do? It comes back here. What's up here? Micro high volume structure. Sellers are here, sellers are here. This is a trigger. Do I want to sell here? It's much more risky because I might just rotate down and then revert back here. Again, I'm bearish, but that's me. I'm not saying that's a good idea. I'm just saying it's just what I think. How are we doing, guys? And how you guys doing in YouTube? You doing okay? See the behavior? Mean reversion. So, in this, you can get chopped into oblivion. Imagine this using higher time frame, as you think of it, as a position trader. So, you get long, well, positions are a bit different, but, all you do is if you're lucky, you get risk neutral. And then if it breaks down, which it potentially will, you're going to take a stop. Or you're taking a short in here, and then it comes up here and takes you out. And that's what happens in this kind of thing. So what happened to me with my systems, when the market in a higher time frame, we're talking daily time frames, RTH, would go into this, I would draw down. And I tell you, I tried everything to fix it with a system is that the system would detect. And again, the problem with that whole concept was that there had to be enough losses, if you will, for the system to detect that we were now, don't forget RTH, that we're in a chop. So it was always backwards looking. So I had to find a better solution. So I worked many years to do that. So for me, ultimately, I ended up here doing this. No indicators. I went to the other extreme. It was very hard to do because when you spend years building systems and using technical indicators, all the same stuff you've done, to actually remove it was traumatic. It's like an old friend. You've worked so well. I've had so many winning trades and winning weeks and winning months, but I'm always going in the wrong direction. So I would need those trending days to make up for the days where I didn't shift into mean reversion. And it took not one day. I mean, look at mean reversion here. How many individual days might it take of if this was RTH to shift? Well, that was all based on system. So anyway, ultimately tossed it, right? And it's very hard to let go of something that you have familiarity with, and you think, well, maybe I should keep working on it. Maybe I'll make it better. Well, the system made it better, but not good enough. See, watch the order flow. See the order flow here? And they come back in here. That's like a lid. What is down here? Another lid is over here. Now, the thing with liquidity, you never know what it's going to do. Are they going to pull and like basically open the trap door? Or are they going to stay here and then we're going to do this? So this takes a lot more patience and discipline to trade. Mean reversion is more difficult, I think, for developing retail traders to operate it because of FOMO and hesitation. Is it going to keep, all that kind of thing. So what happens to us psychologically is if we don't take this, we might sell this. And then this risk, we're going to get taken out. So you really got to understand what you're doing. What I always suggest in Trader Lab is traders isolate conditions and build a plan. Once you recognize the condition, it's if this, then that. If not, then what? See the behavior? So do you want to be trading this thing? Well, that's up to you. If you don't have a statistical edge in mean reversion, your job is not to trade it. Notice where we come. Just look. Now, there's no precision in any of this. It's enough to make you nauseous. Sellers were here. Sellers are now here. And we tested this. Notice the volatility. These guys are now pulled. Let's see if they raise or what happens. So this is just a nightmare on Elm Street. That's what we should call nightmare trading. Mean reversion is very hard. So you'd have a plan for it in Trader Lab, and you have to keep statistics for your mean reversion trades, specific structured trades that you would operate in here. Okay. There's more to this. You can learn this in Trader Lab, but this is a specific process. And it's really, you got to be good. There's no time. Here's stop divergence. You guys know divergence. It's the only thing I use from indicator world. If I have two stops here and I make a higher price, and I only have one stop, and I have selling icebergs, then potentially this might be too high right here. There's a micro high volume structures right there, right there, that little node. So the market then can, if this is still too high, come back here. It's not. It's not. Resistance is also up here. So let's see what it does. It's very difficult to trade this, guys. See what it's doing? Very hard. And today is exceptionally choppy. I've noticed a lot more algorithmic behavior today. This is algo. Uh, Bracketing algos. See this thing? They're all the same guy. So they're manipulating or pressing the book. Let's see what happens here. Do you guys have questions? Just that kind of day today, guys. There's not a lot going on that to me makes sense to put risk on unless it comes to a location. And let's look at talking about location. Let's take a look here. Remember, the profile is symmetrical. This is a location, remember? So let's see what it does. The outside edge is up in here. Let me turn a couple little things on here for you guys. One moment, guys. Making some adjustments. I'm going to put the high volume and low volume nodes on Bookmap. They are being generated by Investor RT, which is my higher time frame software. Please give a like if you're visiting in YouTube. You have questions, put them in there. I didn't see your Paris Las Vajas. I know you're not using a time chart. If you were to compare this chart to a time chart, it would be like a 10-second chart. I don't know. I don't use a time chart, so I can't compare it because I don't use it. So you just have to kind of see what fits. So I can't help you with that because I don't know. This is an outside edge. Seems a little off. It should be up here. Let me see if I can. So let's watch this liquidity. It's an algo. See how it's moving up, 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 up. And this is support now here. Let's see what it does. These are not trades, guys. I just stay away from them. I do know this is the mean. So this is mean reversion. So I know the possibility exists to come from up here down here. It's a 20-point trade, you know. But again, you have to be able to enter. Let's see if we can look at this a little better. See, with Bookmap, you can open this thing up, whatever makes sense for you. You can see the structure much more clearly. Let me just move this around a little bit. So my liquidity is here. 8 buy stops coming out. Hits the liquidity. I come up here. I get 100, I think, selling icebergs here and only one stop. That's called stop divergence. I made this up. Now this, if it's in your plan and it's outside, this is the trigger, and now it has to stay under here. High volume, see it? This node. This is a potential short, but you can't be entering this. When you get, this is where structured trades come in. If this is vetted, then you know this is absorption. When we have a green delta bubble and we don't go anywhere, why? Because you have the limit order book here, selling icebergs, buy stops, 100 icebergs. So the sellers are here, that's the passive orders, and stop divergence is here. The break is the trigger. The resistance is where the absorption was, which is right there. You can learn this in trade. It's right there. So you can enter this trade here because the sellers took over from the buyers here. And then we test. And there's the high volume right there. That's called the micro high volume. This is trading in fractals. Now it's a little advanced, you know. But you have to put your order out here. You can't be waiting for confirmation. You'll sell it down here. That doesn't work, at least for me, because I need that range to try to get risk neutral and then go to target, which is mean reversion, wherever that is. Where is this? I don't even know where. Oh, back here. Okay. Yeah. This is the mean. So if you're taking these trades, you're going here. That's the mean. That's what the reversion trading is. It's this to this. And the idea is you want it to fall out the bottom, but what is it doing? Now we're coming back to where the sellers took over. And the high volume node is there. Let's see what happens here, because that's our quote resistance. It's not a recommendation, anything. Where did the sellers take over? They took over right here. So let's see. Let's see what it does right here. Okay. Now you guys see this in real time. This a little more complex. This is the test. So depending on your trade plan, you would either get short here to there or wait for the retracement, the test of the microstructure, which is that node called high volume node. You would short this, your stop would be here, and you're looking to get risk neutral and come back here or fall out the bottom and or take a stop or a scratch. Does that make sense, guys? This is Trader Lab methodology. I think it could come out either side. You know, um, it seems to be holding up pretty well, and it appears it might come out the top side. But I just trade the plan. You know, I mean, whatever it does, it does. Um, I put a trade on, I get a scale or take a stop. It's not more complicated than that. If I mean, it appears that we're holding up very well, and that there's a chance since we already took out the IB low and we came in without any extension that we can take out the IB high. And if we take out the IB high, it sets up something called a neutral day, which just means it's balanced on both sides are active. Let's watch this right here. Buy sweep, liquidity. So we want to watch this area. It's not a recommendation. So there's a reasonable shot we're going to get this, but we can also still revert. So for me, I really don't have a lot to do in here, other than for me, what I'm noticing is that even though we're rotating down, what we did was we checked this and we didn't get this. So this is the retail price. If it's too low, we can come back up. So it appears it might be too low. So I just sit here and wait, and I just trade my little rotations. If that's my plan, which it is for today, is just rotate. So the market could still be going up, and I can trade rotational trades. If it's in my plan. Or when I come out above something like this, then it's suggesting to me that we're taking out resistance, which was this here. And once we break above it, then it's suggesting north. So that's what it suggests. I don't know, like everything else, I don't know what is going to happen. I just follow a plan, and some days, some days are better than others. This is not an easy day for me. Not that any day is really easy. These are the 60 PDFs of structured trades. They're available to everybody in the Bookmap Discord Trader Lab community. There's also a library of webinars and the community itself. There's a link in the bottom of YouTube if you're inclined. Um, there's no cost for it. Also, the community, so it's a group that's come together to leverage their collective experience. I mean, to do better. We're all trying to do better. Doesn't matter how long you've been trading, you're going to want to do better. High volume node, outside edge. Hard to trade this, guys. Don't think this is simple. There's nothing simple about this. This is the outside edge of this distribution. Low volume node, so outside, low volume. If I fall under here, I can come back here. It's still mean reversion. So up to you. You can either trade mean reversion, or if you think the market's going to take out the first hour's high, which it might, then you'd just get positioned and you'd hang out through the rotations. It's all subject to time frame or fractal. Please give a like. I like you guys coming and visiting the Trader Lab, and hope you like me and that you get something from this. I appreciate your support. Um, yeah, Loya, if it's hard to hear me, it's your YouTube. It's not here. Please give a like on the way out. Remember, this stream's available to Bookmap Discord Trader Lab community to reverse engineer, screenshot, and the rest. And it will get posted up on YouTube if you want to review it. I suggest you come to the Bookmap Discord Trader Lab community, review the library of webinars, download all the documentation, and start building out a trade plan. That's what the business of trading is about, and that's what the Trader Lab is about. Please give a like, and I look forward to seeing you guys tomorrow. Trade safe, and if this is not your market or the volatility is outside of your risk parameters, adjust to it or wait for a day that fits. Thanks again, guys. Have a super day. Thanks for visiting the Trader Lab.